Hello and welcome to the Wealth Amplifier podcast, episode 3. Just as a reminder, before we dive in today with our special guest, nothing you hear today should be construed as tax, legal, or investment advice. It's just a conversation. And on today's podcast, what we're going to do, as we had mentioned at the outset, the goal of this podcast, using the term amplify, is to amplify either a topic, an idea, or a person. And in general, we have a fairly extensive network here at Amplius Wealth Advisors, and we want to amplify some of the people in that network so that we can learn more about them and the industry that they are in. So for today's guest, we are honored to have Meghan Cross, partner of AmplifyHer Ventures. Meghan, welcome to the Wealth Amplifier podcast.
Thanks so much, Matt. I'm very excited to be here.
So let's just dive right in. Tell us about your career prior to AmplifyHer Ventures, and then we'll get more into what exactly you do at AmplifyHer Ventures.
Sure. So my career had started on the startup operating side of the venture table, and then I moved into investing. So basically, what I do is I invest into early stage companies. And prior to that, I actually worked on the marketing and operating side, building those companies, building those high growth businesses. So when I graduated from Cornell way back when in 2008, I basically just got completely swept away into the New York tech boom. I did the early marketing and PR for a number of companies that quickly became household names, Skype, Foursquare, to name a couple. Did marketing for a media company called Stylecaster Media Group, which ultimately got acquired by a larger entity. And through all of that, basically what I realized was that, every startup has its wins and challenges, and the investors have this incredible level of pattern recognition such that they can kind of swoop in and share their tips and hacks on what to do, what to avoid based on their portfolio of however many other investments. I really wanted to garner that pattern recognition and that ability to build businesses from that vantage point. So I went back to grad school at Columbia and used that to basically transition into the investing world. And when I graduated from business school, I was recruited by a group of Cornell Board of Trustees to really build Cornell's alumni investment firm, Red Bear Angels. And through that, actually made a number of really exciting investments into what would now be called unicorns, billion-dollar plus businesses, Lyft, Truman, to name a few. And then about 4 years ago, my now business partner, Trisha Black, and I got together and started talking about basically the gender disparity that exists in venture capital and her vision for what a fund could look like around that thesis. And long story short, we kicked off AmplifyHer Ventures with our first investment in October of 2018. And it's been quite exciting ever since.
That's awesome. And it's a great name. I mean, we, of course, are biased to anything that says amplify in the name, but in particular, AmplifyHer. I remember when we were talking about that early on when you were starting, we were both starting companies in similar times with the sort of amp prefix. So I definitely approve of the name.
Well, I'm amped for both of us about it.
Well done there. So when you're looking at a company, when you're going to make an investment, tell us what types of things you look for in the leadership team of the company when you're going to, in advance of making that investment and doing your due diligence.
Well, first of all, I'm glad you asked about that first, because that is the most important thing that we look at. We're investing at the earliest stage of the company. So really, that is the only given across all the companies that we're looking at, which is the team. So what specifically I usually like to look for in a team is demonstrations of product market fit based on the minimal resources that those individuals had available to them prior to taking an outside capital. So how resourceful has a team been based on a bootstrapped mentality. So what I mean by that is if it's a consumer-facing business, for example, I've seen founders look into using free tools, such as simply creating a newsletter or a spreadsheet based on garnering feedback from potential customers of a given business. Seeing that level of engagement, using social channels in order to understand the dynamics of a community that could be a following to a potential business and solving that problem later on. For a B2B business, there are ways to see that a leadership team has demonstrated bootstrap product market fit through really just learning as much as possible about the sales process and the customer dynamics and demonstrating how quick a sales process can be based on just LOIs and having initial pilot customers without ever having to raise an outside dollar. And
LOI is just a letter of intent for our listeners out there that may not got it. Can carry on.
Exactly. Basically, ways of getting indications of interest from potential customers in a given market opportunity. And what those all do is they don't not only show how clever and shrewd a founder can be, but they also show that the market opportunity is a need as opposed to a nice to have. And at least the initial stage, there isn't an extreme level of education hurdle there. There is a demand from the customer side. So that's one area.
Right.
There are other elements to team that is appealing. For a while, I think you would hear VCs say that if a founder has a track record of having previously built a business, that's a plus. I don't necessarily believe that to be true because I find that it's important to be opportunistic to look to what the next generation of founders look like and are. And then there's also an element of what is the domain expertise? Why is this founder starting a business in this particular area in the first place?
Right.
Really, all of these factors tie back to three main principles of looking at a business at the seed stage, which is where we're investing. And that's market, management, and product. And I guess if we were to prioritize it, we'd say management, followed by market, followed by product. Management is the given. Market is the problem that they're trying to solve.
Right.
And then
the opportunity, if you will.
Yeah.
And so in that world, you're specifically focused on female-led companies.
Mm-hmm.
So what unique challenges, opportunities do you see in that world, female-led startup companies?
Yeah, well, so it's incredibly financially opportunistic. I'll be completely honest about that. So at Amplifier, we're investing into companies founded or led by exceptional women and diverse leadership teams. And the reason for that, beyond the need to see this change happen, is the data that's out there that's actually kind of mind-blowing. So consistently, for the past several years, only 2 to 3% of all venture dollars have gone to female founders.
I'm sorry, you said 2 to 3%?
Of all venture dollars have been raised by female-founded teams. So if we're looking at that a little bit more conservatively and realistically, gender diverse teams, so teams with at least one woman on the founding team, raise about 15% of that capital.
Okay.
It's still not a lot.
I would say it's still a pretty small number.
Still pretty small. And what's interesting about that is there have been studies to show that the earliest investors, the seed stage investors like us into those gender diverse companies, actually return 63% greater ROI. So not to mention, women-led businesses have been shown to exit, so get to a liquidity point about a year sooner, which in the venture landscape is pretty meaningful. It means they get to liquidity in about 6 years on average, as opposed to 7. And they generate about 10% greater profitability. So what we're seeing is a very logical, almost value investment strategy, not to sound crass about it. And there, we're basically tapping into otherwise untapped talent. And because of our network and the companies that we're seeing in our very robust pipeline of opportunities, we believe we have an opportunity to really exercise that outsized performance.
Yeah, so it's really, you hear all about in the public market world, ESG is a very very trendy topic, but it seems to me effectively what you're saying here is not forget all that, but put all that to the side. This is just where if you want higher ROI, looking at let's say market inefficiency is a good way to go, regardless of what's driving it.
Right. It absolutely can be considered, in my opinion, a market inefficiency. There is a double bottom line effect to it, for sure. But and we keep tabs on that too. With the investments we've made, how many women-led companies now are high growth businesses? What is that aggregate enterprise value? How many women leaders are we enabling to be hired into those roles? But really what it comes down to is we're focused on generating returns to our limited partners. So
yeah,
that's why we're doing it.
Good. Just a couple more questions, because as listeners know, we try to keep these podcasts to 15 to 20 minutes. And I have a couple more I want to hit on here. Let's talk about VC in general,
Okay.
From when you got in to now and really going forward. How do you see venture capital evolving over the next 5-10 years? How do you think it's going to be different?
So there's so many changes that have happened since I've started in VC, and in the short time since I've started in VC, right? Like past decade, et cetera. So I would say a main change is that there are more micro VC firms than ever before, which are effectively firms that are, depending on the definition, like less than 50 million AUM or,
okay.
And what that means is there's a lot of diversification opportunities to get access to different types of deal flow. There are different focus areas. All of that is great in terms of having more capital going towards different types of innovation. However, it is creating a lot of noise in the market, such that I think we're seeing VCs become very dogmatic about their investment thesis areas. There is more channels to share information. You see more VCs than ever before having everything from flashy one-liners on LinkedIn to strategically placed headlines in TechCrunch to a Substack. Whereas historically, I think the venture capital business has been one of listening and really digesting and learning and making decisions based on asking questions. So that's definitely a cultural shift. But that said, the emerging managers, which are oftentimes these micro VCs, are an opportunity for a new wave of venture capital. 90% of women decision makers in the VC industry are those who have started their own funds. So it's opportunistic in that way. And there's also a lot of, I think, what might be interesting for this conversation, a lot of non-professional investors in the venture asset class who are getting access to a lot of these great opportunities.
So when you say non-professional, you mean those that aren't choosing venture capital as a career, but just have money and want to invest?
Exactly. So angel investors, those with the liquidity to create their own personal portfolios, folks who can look beyond the traditional 60-40 and realize there's a whole asset class that they can tap into that perhaps has, a personal affiliation to a given company here and there. It's exciting. It's also, there's a lot of guardrails that need to happen for that.
Right.
That's definitely been an exciting development too. And I think current market volatility and folks pulling out of the long-term equity market aside, in 5 years, we're going to continue to see that be a growth pattern.
So let's shift gears here for a moment and have you provide perhaps some career mentorship on the spot, if you might. Not only do we have people listening that may be interested in getting into venture capital, but knowing our listener base, we may have parents and grandparents listening that may have kids and grandchildren that may want to get into this space. So what advice would you give, whether it's career experience, temperament, personality, whatever, for someone who wants to break into the venture capital world?
Well, first of all, I appreciate you asking me that because I normally come to you for career advice. But I'll share that I think in terms of temperament, patience is very important. I'll steal this line from my husband, who also is a venture investor. This is, we buy low and sell once. So we're investing into companies at the earliest stage based on the fundamentals of the business and the growth opportunities there. But we really only have one opportunity for a liquidity event, the exception of maybe a secondary sale here or there. And that's when a company gets acquired or goes public down the road, right? So, for example, I just had a liquidity event this morning from a company that I worked on 6 years ago. And that company has gone through pivots. It's gone through ups and downs like every other company. And I think if there was a behavior of having a knee-jerk reaction among investors, first of all, the logistics of venture are such that you can't actually pull out at the drop of a hat. But there's a level of patience required in order to see that company through those obstacles so it can truly come to fruition. In terms of background that's needed to go into venture capital as a career, it is entirely dependent on the individual and the opportunities ahead. I can say that I co-invest alongside folks who previously were consultants, bankers, startup operators, research scientists, academics, everything across the board prior to getting into venture investing.
Great. Well, as we wind down here, you will be the first to do this, but it's going to be a tradition on the Wealth Amplifier podcast that we would like all of our guests, or give them the opportunity to amplify either a charity, a nonprofit, a cause that you were involved in, let's say, generally speaking, outside of the office, so however you want to define that, or related to work. So is there anything you would like to amplify here today before we part ways?
Oh, sure. There's a few, but I'll say based on the months coming up and some of the research I've actually been doing on the work side as well, there is a great need for oncology research in general, but ovarian cancer research, and I can amplify the Ovarian Cancer Research Foundation for that. Is that a good? Okay.
Who could argue with that? Well, with that, we are going to wrap this up. Meghan Cross, thank you so much. Again, partner of AmplifyHer Ventures. Thanks for giving us an insight into your world and the venture capital world. So thanks for coming on.
Thanks so much for having me.
And as a reminder for this podcast, again, we're going to do these 15 to 20 minute sets, generally amplifying a topic, idea, or person. And today we had the person of Meghan Cross and the idea or topic of venture capital. So we'll be back for another episode soon. Thank you.